Welcome back, everyone, to the Risk Intel podcast, powered by SRA, where we share risk intelligence from experts across the banking industry. I'm your host, Ed Vincent, Executive Vice President at SRA. Hello, welcome to today's episode of the Risk Intel podcast. It gives me great pleasure to welcome Shea Gardner from the Risk Management Association. Shea, thanks for being with us today.
Ed, thanks for inviting me.
Shea, you join us here with quite a bit of deep risk management and background here, working with the RMA for 13 years. I know you had a background in finance prior to joining the RMA, and then when you joined the association, began in the accounting area, but then quickly moved into the credit products area, and has been part of that team for more than a decade, and have more recently now moved into the Risk Maturity Framework area, which certainly will be a topic of discussion for us today. But before we jump right into the Risk Maturity Framework, let's perhaps take half a step back for those folks who are not as familiar with the RMA, and talk a little bit about the background of the RMA, its mission, and how does then that tie into your efforts to help banks evaluate the maturity of their risk programs.
Yeah, I think that's a great place to start, Ed. So RMA, essentially, we are a member organization, and we take membership from financial institutions. And so we support them for providing sound risk management principles, which gets us right into the risk maturity framework, where we have the 9 pillars. RMA's mission, we actually touch on, we call our 3 pillars. So the actual mission statement we have is to advance enterprise-wide risk management in financial services through education, products, and community. So we provide in-person and online training from enterprise bank level, executive training, board training. Our products, we have our eMentor product, our statement studies product, which can be thought as a banker's toolbox, and we provide industry benchmarking, but more importantly, through community. So we have roughly 33,000 RMA individual associates, but we also have 100 RMA chapters that are located in the US, Canada, and few international RAN chapters. And these are run strictly voluntarily by our members, providing opportunities within their local communities for education, training, and networking through all stages of their financial services career. So if we think about our mission, and the mission of our members is ultimately to be operating and performing at a risk mature level, where RMA can help drive the soundness of all types of risk, where we focus on credit risk, market risk, regulatory compliance, others, and all these aspects that are included as the 9 pillars of the RMF. And that's kind of how we built that with the RMA mission in mind.
Got it. So education, right, product and community, right, and clearly a very, a wide footprint here within the financial institution community. Let's unpack that last piece there of the risk maturity framework, which is clearly the area that you're concentrating on now. Can you talk a little bit about how this came about, and perhaps how and the work which was done to develop the RMF, but then really get into the nuts and bolts of, when you talk to your members today, what are the types of questions you hear from them? What are you hearing banks talk about as it relates to their risk management programs? Clearly, there's a lot going on in the market these days, and this is an area of significant interest.
Yeah, so the RMF came about in 2019. It came through our RMA mid-tier bank council. So these are individuals from the mid-tier level banks, and they came together, and in one meeting, there was a discussion on how banks can more accurately measure the risk maturity of their institution. And that's how we were introduced to the SRA team. And so together we formally created the risk maturity framework powered by Watchtower. Originally, I believe the first prototype was a Excel spreadsheet, but now is the full platform in the Watchtower product. I've been working on the risk maturity framework for just a couple months, but I've been on many different bank calls. So that's with our members and the SRA mutual clients. But the common theme that I've been hearing around is peer benchmarking. So how is my bank risk maturity and risk programs comparing to my peers? Are we in alignment to the peers and the competitors? What do we need to do better, and where do we compare with those folks? Another common theme I've taken notice is the guidance from regulators. Banks are asking, how does the risk maturity rating compare to the regulatory requirements and ratings? And this is a great question that comes from banks to better understand that the risk maturity framework was specifically built with this in mind, and the 5-point rating system, creating better visibility and alignment with those regulator standards. While using the framework, a bank and their teams will be able to better see where they can make those improvements and start setting up those plans to become a more risk mature organization moving forward.
Are you hearing a few interesting things that you mentioned there? The 5-point rating system. For those who want more information on that, we have a separate Risk Intel podcast on the 3 versus the 5-point scheme there, where we had the RMA president from one of the regions that you mentioned there, Shea Beth Watson, joined us to talk about that topic. But can you go into this concept of the regulatory guidance and the regulators now coming in the current market that we're in, right? Are you hearing anything from your members about increased scrutiny or regulators really focusing on risk management programs in particular over the last 6 months?
I do, especially, with the recent current events. The regulators want to see what actions are institutions taking to prevent this. So becoming more proactive rather than reactive, and developing the plans in order to combat that issue that banks are facing today.
Great. The other theme that you mentioned there that you had heard in the marketplace was around competitive intelligence or peer benchmarking. Do you have any sense as to how banks will want to use that information?
Yeah, so having been the product manager on our statement studies product, I actually love this question because benchmarking is kind of already what I've been used to in my career here at RMA. But the RMF peer benchmarking feature will enable the banks to view where their peers' maturity levels are compared to where they fall within the market, displaying where they need to be, and thus allowing them to plan more intelligently on how to get to that desired maturity level, especially if they're approaching growth. A benchmark is generally just that baseline, and if you know what that baseline is, it will allow you to thoughtfully create goals and milestones, ultimately to build and develop a roadmap to reach and eventually exceed that baseline. I also think that revealing the benchmarking data can allow individual banks to focus on areas that really matter to them and where they're falling short compared to their peers, and really hone in on those areas for improvement.
Yeah, there was a great study a number of years ago around the impact of a robust risk management program on the enterprise value of organizations, and it showed that, I think it was an Ernst & Young and HBR study, that financial institutions that had a more robust risk management program had a 25% or something like that, higher enterprise value. And so I think that this point of being able to benchmark yourself and compare yourself from one institution or another will help you then, I think, you build that roadmap. I think it was the terminology you used there, right? Of how do you get to that desired maturity level? That roadmap is your action plan and allows you to hold yourself accountable to getting there. So I certainly can see the value in that. I think I might try and answer this question that I ask of you, the last question I have, which is, what do you think of the value proposition is of the risk maturity framework and of peer benchmarking? I think I heard you talk a bit about safety and soundness there earlier, and that really comes to mind as, I think, part of the value proposition. Is that kind of what you think about when you think of the value proposition of the risk maturity framework?
Yeah, absolutely. So if I think about it, the real value from using RMF comes in three different parts, and maybe similar to the RMA mission, right? So I would say first is the gap analysis. So by completing the questionnaire, you get the full picture, the full view of your existing risk management program, knowing where you are today, knowing where the gaps are, knowing where you want to go. It really puts the gears in motion to improve those programs. So really having that gap analysis, I think, is the first value. The second would be communication. The RMF gives you the opportunity to align the communications between your first line of defense, your board, and the regulators to just become more aligned, and everybody knows what the goal is, and everybody knows where that plan is going to take us to reach those goals, right? And I think the third is maybe a bit more aligned with my own character and kind of how I work, but is having a plan in place. So RMF, once you identify those gaps of your risk management program, it also acts as a project manager, and therefore you can create the plan and what is it that we want to accomplish, how are we going to get there, communicating with our stakeholders, creating tasks, assigning those tasks, and creating the due dates for accomplishment. And all of this are features of the RMF, especially within those reporting features that SRA created in the dashboard. So really it's creating that single source of truth and aligning the goals of the institution to become more risk mature.
Shea, thank you. That last bit there really, I think, hit the nail on the head of having a plan, identifying what those gaps are, and a pathway to move forward, and then giving you a framework to communicate, right? Whether that is to your board, to your investors, to your stakeholders, to regulators. Those are, I think, are really powerful messages for all of our listeners to hear today. Thank you very much for being with us. We appreciate it, and we look forward to seeing you out there demonstrating and talking about the risk maturity framework in the coming weeks. Take care.
Thanks, Ed. Bye-bye.